Good morning, good afternoon, good evening, wherever you happen to be. Welcome to the Valutrades webinar on trader sentiment. My name is Brad Alexander, and I'm going to be spending a bit of time with you this evening to talk about trader sentiment and what it is and how we can use it in our trading. Right, for those of you who know me, hopefully you do, you have seen me on the Market Blast videos on Mondays and Tuesdays, and you've seen me do a few webinars with you, and I hope they've been helpful. Always good to send comments back to the team at Valutrades if you want to see anything new or anything exciting or have any comments. My day-to-day job is to provide content for a lot of companies and fintech companies in the FX and retail trading business. So this is all I do. I get to watch Bloomberg all day and I trade. I've been a professional trader, a retail trader, and I do a lot of work, as I said, with fintech companies, educators, and brokers, and I do tutor quite a few students. So I live and breathe this business all day long, and I really enjoy it. Hopefully, I can pass on some of my experience and enthusiasm to you. So before we get going, CFDs and FX are complex instruments, and they come with a bit of risk. So I would highly encourage you to read the risk warnings on the Valutrades website to see what you're getting into before. Don't start trading large amounts of money unless you really know what you're doing. If you have any questions, just contact the Valutrades team on the chat line on the website. 60% of retail investors' accounts lose money when trading with this provider. And I can tell you from experience, that is a very, very good number. Let's hope by watching these webinars and following our videos and education, you'll be part of the 40% that makes the money. So buckle up and let's see if we can have some fun with trader sentiment. So our topics for today, if you have any questions, just pop them onto the question line on the webinar. You can see the question line there. I see there's a couple there already. Thanks, Strawberry. What is trader sentiment? Well, basically, trader sentiment in a nutshell is the mood of the market. How are those people who actually trade feeling about the market? And that's just not necessarily the big boys or the banks or all the retail traders. It's a variety of ways to look at sentiment. And that's what we're going to be looking through during this webinar, the different types of trader sentiment. And also, a lot of people will say, well, what's the difference between fundamental analysis and trader sentiment? Well, there actually is quite a lot of crossover, and that's what we're going to be going through and hopefully taking away some of the confusion that people have about trader sentiment versus fundamental analysis. Some bits of it are simply cut and dry. We're looking at the actual long and short positions of traders, and others, of course, fundamental analysis. What's going on in the world. And again, if you watch my Monday videos, you'll know exactly what I'm talking about. So, but again, there is very often quite a bit of crossover when it comes to trader sentiment versus fundamental analysis. And let's see if we can get you to use both of them together. Okay, so what we're going to be doing is breaking this down into various bits and pieces. As I said, we're going to be looking at different types of sentiment, but also I want to talk about different instruments because different instruments react differently to different things. And again, if you've been watching the videos and trading for any length of time, you will know that something like gold reacts quite differently to other instruments. And we're going to be going through what makes gold tick. And we're going to be looking at a thing called Commitment of Traders, the COT report. And the COT report is a complicated bit of a report compiled by the CRTC in the United States. And it's a very valuable tool. And I'm going to show you how to use it and how to read it. We'll be looking at sentiment on euro dollar. Again, sentiment on euro dollar can be very different than gold. We'll look at sentiment on dollar yen, sentiment on pound dollar, sentiment on Aussie dollar. And you're wondering, why are we picking on different currencies? Well, there are 5 different currencies and different pairs that Valutrades offer on their trader sentiment page, and I'll show you that in a minute. And it's important to understand that they all react differently. They do, however, have one thing in common, and that's the US dollar. And you need to understand that the US dollar can be a very, very powerful driving force, sentiment or not. Okay. To find the Valutrades trader sentiment, simply go onto the website and you'll see the new menu tab on the top left. Click on that and you'll find resources. Click on resources. You'll find tools and trading sentiment. So if we click on trading sentiment, that's what we get. So simply scroll down and you can see the 5 pairs that Valutrades shows under their trader sentiment page. Okay, just to understand, these are the positions of Valutrades clients. So if we look at this in detail, we've got euro dollar on the top left. The blue are the long positions, and the red will be the short positions. Again, these are the individual clients of Valutrades and their positions right now at this very moment. And this is updated once per day. So we've got 62% of people going long on euro dollar, 37.7% going short. So it's roughly 2/3 to 1/3. And you can see with the other pairs, gold, XAU USD, dollar yen, pound dollar, and Aussie dollar. I'm going to be showing you during this webinar how these can change from day to day. And sometimes they change very subtly, and sometimes they change quite dramatically. And it's very interesting to see where Valutrades clients are going long and going short on these 5 pairs. So you're probably wondering, why only 5 pairs? Well, it's important, like anything in life, if you're going to be collecting data, you should have a source that provides you with lots of data. And these 5 pairs will be the most popular set of instruments that Valutrades clients will trade. This is a very common thing. There's nothing magical about this. There's no point in putting trader sentiment on South African rand versus the euro, for example, because not many people will be trading it, and it's really not that valuable. But euro dollar, gold, cable, and things like that are very, very popular, and it's very important to understand what we're actually after. Okay, someone just asked, when can I see the COT report? I'm going to be looking at that very soon. There are a lot of, basically, if you Google it, you can find it. And I'll show you some examples of the COT report, but we'll get to that in a second. Okay, so let's look specifically at gold. So again, we had, in this case, here's another, this is today's sentiment, and we have about 50-50. So people are split on gold. And one of the reasons people are split on gold, and I'm going to be showing you some concrete examples on sentiment on gold. Gold reacts to geopolitical events. It's not like silver where people gobble it up and use it in manufacture. It's definitely not like copper, where copper is used in manufacturing, installations, production all over the world. Gold is an instrument for trading and saving and a safe haven unto itself. Obviously, yes, a lot of people buy gold, jewelers buy gold, dentists buy gold. If you ever had your ring resized, you'll have to pay a bit of money to get some more gold stuck in it. That is not the driving force of the market. Gold is basically a barometer for how people are feeling about the world. And you've seen it go up and down very recently, and I'm going to show you some charts that show exactly that. So the sentiment on gold is very, very important in terms of how people are feeling, not just about the markets, but about the world in itself. So right now, Valutrades clients are about 51% short and 48% long. We might as well say 50-50, and that could change as we go along, of course. So here, for example, I've made some screenshots to show how this can change day to day. So this was over a period of about 10 days, so not every single day. So here we had 58% versus 41%. So clearly there people were were long on gold. As time went on, it got even stronger. Valutrades clients were going long on gold more often. Here we are, 63%. So, and this is the period of about 4 days. It's not 3, it's 4 to 5 days as I was taking these screenshots. So you can see that the sentiment with Valutrades clients went quite bullish, as we say, on gold. So more people were going long on gold. And again, it stayed about the same for the final. And you can see today, as I showed you today, it was actually about 50-50. So it actually changed dramatically from one day to the next. Okay, and as someone just asked, here is an example of the Commitment of Traders report. Okay, the Commitment of Traders report is put out by the CRTC in the United States, and it measures quite a variety of different types of traders. So when we look at something like the Valutrades client sentiment, this is only one tool in the box. And if you've followed any of my education or even the videos, you'll note that I use the term confirmation very often. So if I'm trading Bollinger Bands on a chart, I will not trade. I will not make a decision based on Bollinger Bands. I will make a decision based on that. But I want confirmation from, say, a stochastic oscillator, or maybe I want confirmation as well from a candle formation or a chart pattern. So some pedantic traders can say, I'm only going to open a position if I see 5 different indicators and sentiments and so forth lined up. I will not go into a position where I've only got 4 out of 5. I want 5 out of 5. We do not say use client sentiment to base our decision solely on that. So we can use this as a guide, or use this as a confirmation tool. You can use it as a passive confirmation tool where we combine this with another trade. Like I say, we've got technical indicators like moving averages, RSI, MACD. We can actually add this into the mix in your trading plan, which I hope you are making a trading plan. I'm going to be talking about that in a minute. So again, this is not to get you to make decisions based on just what you see on the trader sentiment. It is another arrow in your quiver, another tool in your toolbox to add to your technical indicators, your fundamental analysis, and whatever else you use to trade with. If you only trade in full moons, then good for you. Hopefully that works out for you. So again, this is a tool, not necessarily a decision maker. And again, speaking of tools, many traders use the Commitment of Traders report. I got this. This is actually from a website called Bar Chart, and you can simply Google Commitment of Traders or COT report, and you can see these, and they're really quite simple. So this basically is the COT on gold. So what they do, they compile the data every Tuesday, and they published it every Friday. So here we're looking at, if you can read the fine print on this chart, this is actually over a 3-year period. It goes from the end of September, roughly August of 2019 into today. And you can see the price fluctuating on gold from $1,300 up to $2,000, almost $100. As you know, if you've been trading with Valutrades, you'll know the price of gold has been bouncing around like crazy. But here's an important thing to understand. Don't just look at this chart and say, okay, great, everybody's long on gold, everybody's short on gold. You need to understand what these colorful lines mean. Okay, so I'm going to go through this very quickly with you, because 2 are not really important. 1 is very important. The red one is on the top. This is the top chart. If you can see my cursor here. On the very top, we've got, and to be honest, they've not really given us any head starts with their color coding, and I'll explain why. On the top chart, you see a red line, which are the short positions, but these are the commercial users and swap dealers of gold, and they can often be on the other side of the market. And in fact, if you look at this chart very carefully, you can see they are. The blue line through the middle are non-reporting, basically small investors, retail traders, and you can see that line is so close to the middle, it really isn't very helpful. The green line are the non-commercial spectators, and this consists of people like banks, hedge funds, large, huge family offices. So these are the people who are actually trading gold. They're not looking to buy gold for use. They're not necessarily a central bank who are hoarding gold or storing gold. These are the people, the Goldman Sachs and the big hedge funds of the world, who are actually having long positions. And you can see right across for the last 3 years, they've been long for quite a long time. This actually corresponds with the central banks, because the central banks have been buying gold constantly for about the last 5 years, which is a good sign, because roaring into a pandemic, it's always good to have, and a war, always good to have serious reserves of gold. And that's how the United States has managed to keep its currency very reasonably stable anyway, except with 2008, because they back up every dollar in circulation with gold, and that's an important thing. Lately, the big buyers of gold have been the Chinese central bank, the Russian central bank, Kazakhstan, Turkey. I could list off tons and tons, and you can actually find these things online. It's very important to keep an eye on what's happening in the world with gold. And again, this is where we have an overlap of fundamental analysis versus trader sentiment. But it's the same thing in this case. If vast amounts of people are buying gold, that's going to drive the price up. So the sentiment on gold is bullish. They're buying it. The fundamental analysis is that the central banks are buying gold, therefore the price is going up. I personally had a fear that during the pandemic there'd be a massive sell-off of gold, so that the economies could mitigate their debt, and they haven't done that yet. The central banks have done a really good job of keeping us all alive. Sadly, going into Ukraine war, they may not be able to do that. So hopefully, fingers crossed, we can come out of this unscathed. I don't know about you, but I'm paying vast amounts of money for electricity and petrol. I'm quite lucky the Spanish government is subsidizing every liter of petrol we buy, so I get a big discount when I go to the pumps, and I don't think everybody in the world has got that luxury. I just wish they'd give us money back on our electricity bills. It's crazy. Right, getting back to reality, one thing you need to understand is that when you look at the Commitment of Traders report, the chart below is the disaggregated report, and that basically breaks down the commercial and non-commercial users or traders and buyers of gold. It's a bit deceiving because they use a similar color code. So the best thing to do for beginning traders is to ignore it. Make sure you're not trading the wrong one, because you can see the green line on the bottom and the green line on the top are doing the opposite. They are actually different. The bottom line green is commercial swap dealers, and the top green line is the people we want to pay attention to, the non-commercial hedge funds and so forth. So I just wanted to show you that chart so there's no confusion. And these are based on futures prices, by the way. These are not spot prices. So these traders and money managers are investing their clients' money in futures contracts. It's like buying stocks. So it's not just the spot market. So it's a bit more transparent, because in the futures market, you have to disclose exactly what you're doing. All the fund managers have to disclose exactly what they're doing. So there's no guesswork in this. So again, to answer your question, simply Google COT. I use barchart.com, and you can find the COT reports as you go. And I'm going to be showing you, it's not just on gold, it's on pretty much everything. Okay, here we have a close-up of what I just talked about. Yeah, I should have gone to this first. So just to give you a better idea, the green line on the top is what we want to pay attention to, the non-commercial or large spectators consisting of money managers or other reportables. So ignore the retail traders, ignore the commercials. Okay, here I want to show you, this is my favorite chart of all time. And I'm going to explain why very briefly. Okay, this is gold, as you can see, and I want to talk about how gold reacts to geopolitical events. And you'll also notice when I do my commentaries and videos, I always say gold bracket XAUUSD, because if you're a beginning trader, you need to understand something very important about what we trade. They're in pairs. You're not just trading gold, you're trading gold against something else. So most of Valutrades clients will be trading gold against the US dollar. You don't necessarily have to do that. There are other currencies you can trade gold against, like the Australian dollar or the euro. And I can show you that later on the MT4 platform. But for all intents and purposes, we're going to be talking about gold versus the US dollar. And the reason that's really important, and the reason that's important to think in pairs for beginning traders especially, is because being a pair, one goes up, the other goes down, and vice versa. So we're not just looking at the price of gold necessarily, we are also looking at how it reacts to the US dollar. So basically, if you understand quote versus base currencies, if the US dollar gets stronger, these candles will go down on the chart of gold, XAUUSD. So it's also very important to understand, especially now that the US dollar is so strong. If you've seen this week's or even last week's market commentaries, Market Blast, I've been talking about that quite a bit. You're trading gold against the US dollar. Gold, the respective value of gold is going down because the US dollar is getting stronger. Right, so let's take a look at this chart, because this chart has everything. It's got something for everyone. And it's an old chart. It's from 2014. So you can see on the left of the chart, we had some serious sentiment happening. We had some serious geopolitical events happening, because in February of 2014, this is the first Russian invasion of the Ukraine. So when we have geopolitical events, gold goes up. It's the safe haven. A lot of people will go to the yen. They're not doing that today for other reasons. I'll explain that in a minute. But they very often go to gold. So in this case, that's exactly what happened. So gold went up and up and up and up because people were nervous. They just don't know what's going to happen. When one superpower like Russia invades their next door neighbor like the Ukraine, it's this in 2014. This was new to everybody. So the value of gold went up, and you can see that it got up. It went from if I can look at my chart here, 1,170 up to 1,400. So that was quite a jump in the price of gold over a matter of about, looks like 2 months, 1 month or so. Then the price of gold came down when things, and two things can cause the price of gold to come down. Once people realize that maybe this isn't such a bad geopolitical event after all, or maybe there was a lull in the action, there were peace talks. There could have been a number of things, or it could have been simply people taking profit, saying, hey, thank you very much. I like gold now at 1380. I'm going to sell. And then the price came back down. That's more to do with fundamental analysis than it is to do with sentiment, but it still is sentiment because the sentiment on gold at that time was bearish. So then we get into if you look straight in the middle of this chart, you know me, you know I love drawing my triangles, and here's one. Here's my favorite triangle of all time. This pretty much a symmetrical pennant on gold. And this again is sentiment, because what we have here is the battle between buyers and sellers. Let me use that phrase a lot. And you can see the consolidation when the triangle or the descending triangle, ascending triangle, or symmetrical pennant get tighter and tighter. That is the indecision amongst traders, and that means the sentiment is not defined. So here we have a case where we're using technical analysis, but we have no sentiment because the price is getting closer and closer together. And gold is one of the trading chart patterns on gold is very, very reliable. And I'm going to tell you a little story as I was trading. This is back in June, obviously, of 2014, maybe the end of May. And I had my trading plan. I was a good responsible trader. I had my chart. I was my journal. I was logging all my trades, and I wrote a note on it: check gold on Thursday. Well, guess what I didn't do? I didn't check gold on Thursday. You can see that big fat red candle crashing through my beautiful symmetrical pennant. So I missed that trade. So if I paid attention to my own notes, I could have made a very, very good trade. I did, however, make a very, very good trade on the way back up, because the tensions, the escalation between Russia and Ukraine escalated, and the price of gold went back up. And you can see that little purple rectangle on that, and that's actually again technical analysis. That's actually a cup and handle pattern. So gold made a very, very nice U-shaped cup, and when the handle appeared, that was a great indicator of a continued bullish trend. And you can see a hammer candle right there in the middle, and gold continued up. I was actually in that trade well before then, and to that date, it was the best trade that I ever made in my life. It just went up and up and up, and I managed to close it near the top of that big fat blue candle. And that was sadly the escalation of Russia invading Ukraine, and people got nervous again. They were sending tanks and trucks into Donetsk. So, it was just clearly a bad geopolitical event that people went to gold as a safe haven. So that was obviously a bullish sentiment on gold. Okay, and you see and here's something that I found, and a lot of beginning traders don't understand this, but it's something you would have to get used to. You see the yellow rectangle on the right. Well, this was very curious in that there was another escalation in the Ukraine in August of 2014, but the price of gold went down. And basically that was because the market had got used to it. The market had not suddenly, but over the months, the market had got used to the fact that there was this war in Ukraine, and it basically just got back to business. And this happened recently with the current war in Ukraine. The price of gold went up and up, and it suddenly leveled off, even though there were more tensions and escalations, because the markets do get used to things. Good, bad, or indifferent. That's what happens. You need to be careful of that. Just because if you can take advantage of a geopolitical event, lightning doesn't always strike twice. You need to be very careful and watch your candles and watch your chart patterns to see what's happening. So anyway, we're looking at quite a variety of different sentiments across this thing, combining technical analysis, combining fundamental analysis with bullish and bearish sentiment on gold. And again, gold reacts differently to various geopolitical reactions and so forth. So let's carry on with that. So here we have the sentiment on euro dollar, and this was about 10 days ago. So we had, again, 2/3 to 1/3. And as the days went on, it got a little stronger on the sentiment. Valutrades clients were trading more long on euro dollar. Then they backed off a bit. So it was pretty much the same all the way through. So there's been pretty much a steady 2/3 to 1/3 long on euro dollar. But if we take a look on the, and this is not euro dollar, this is the dollar index. I'm going to jump sideways a bit on this. A lot of traders who trade any dollar pair, and I'm going to be harping on about this, because the dollar is the United States, of course, is the largest economy in the world. It's going to be driving pretty much everything. So you can actually make your decisions, not necessarily based on sentiment on euro dollar, but you can actually look at the dollar index as a basket. So basically the dollar index is a basket of all the different pairs of the US dollar, and it's heavily weighed to euro dollar, being the largest currency that we trade. And you can see on this one as well, the green line is the non-commercial big boys, and they're all long on the dollar. Okay, sentiment on euro dollar, and something else that we look at every Monday morning are the economic calendars. And you say, well, that's more to do with fundamental analysis. Well, it is and it isn't. Again, it's very, very important to keep an eye on what's happening, not necessarily with your chart patterns and candles and Bollinger Bands and stochastics and MACDs, etc. It's very, very important to look at your economic calendar before you trade every day, and it's very important to keep an eye on the sentiment, whether it's the COT or the Valutrades trader sentiment. And this gets down to individuals. So every time we go to trade, and my order of trading starts with fundamental analysis. I don't even look at my technicals until I know what's happening with my fundamentals, and this gets right down to this. So the sentiment of Christine Lagarde and Jerome Powell. Well, they're just people, aren't they? Well, I want you to try, if you don't understand how important these guys are, what I'd like you to do, next time there's a speech by one of them, especially Jerome Powell, he's, as you can see by this calendar, he gave a speech at 8 o'clock at night, which in Washington time obviously is much earlier, or New York, or wherever he happens to be during that time. I want you to turn on your any dollar chart, or all the dollar charts, and watch what happens on, say, on the 1 minute chart, and watch what happens when these guys are speaking, whether it's Andrew Bailey, the governor of the Bank of England, whether it's Christine Lagarde, the president of the European Central Bank, Jerome Powell, as I mentioned, or any of his deputies or deputy chairs, and watch what happens when they speak, because there are every hedge fund, every bank, every trader who's serious in the world is watching what these guys are saying. And this is the ultimate sentiment tool, watching the central bank chairs give a speech, because they will be looking for a quivering lip will give somebody an indication that something's not right. Or maybe last time they said probably, but this time they said possibly. They're talking about raising interest rates or paring back bonds. This is the ultimate sentiment. And it's important, if you're a serious trader and you want to get serious about this, is to really pay attention to what these central bank governors are doing and saying. Very often you'll have a speech after, say, an interest rate decision or non-farm payrolls or retail sales. Obviously those, and you've seen my videos, you've seen how to take advantage with counter trend trades of those moves. The biggest trades I've made in my career as a professional and a retail trader have been not on the back of counter trend news events. They've been on the back of what Jerome Powell has said, what Christine Lagarde has said, what Mario Draghi has said, etc. These are critically important. They may be boring for some beginning traders, but trust me, if you dig into these, you'll find that these are very, very, very valuable. And these are the ultimate sentiment. If Jerome Powell is bullish on the dollar, the whole market's going to follow him, and you can follow along and take advantage of it. So looking at the euro, one of the things that we need to discuss about the euro, very different than sentiment that's going to affect gold. I mean, especially right now, Obviously we have the Ukraine war going on. So we have some serious problems with the German economy because they really need to make some decisions about their gas and oil supply. The European Central Bank are being very, very slow to raise interest rates. So you can see that the things that affect the euro are quite a bit different than the things that affect gold. And again, euro dollar, we're looking at pairs. So whatever affects the dollar is going to affect euro dollar as well. So you need to be very aware of both sides of the coin. If you're trading euro dollar, you need to be aware of, again, what Christine Lagarde and Jerome Powell, and as you can see by this calendar, they both spoke on the same day. So there could have been some fun trading that day. Okay, so sentiment on the yen. So here we have Valutrades trader sentiment. In this case, it was the opposite. There were 78% short on dollar yen. And again, don't forget it's a pair, so it's the other way around this time. Euro dollar, we had dollar as the quote currency. In this case, we have the Japanese yen as the quote currency, and 22% going long. As the days went on, it shifted a bit. 81% more went short, came back to 79%, then back to 83%. So again, using this as a confirmation tool, could be quite important for your trading. And these days, the yen has always been considered a safe haven currency. So again, I'm going to show a similarity to dollar, yen, and gold. So when times get tough, a lot of people would dump their cash. If they didn't want to go into stocks and bonds, they dump their cash into to the yen. But it would have the opposite effect on the chart that, say, dumping cash into gold would have. So because, and I'm going to repeat, because XAU-USD, the American dollar, is the quote currency. If people put their money into gold, then it'd go up on the chart. If they put their money into the yen, it would go down on the chart. You see the difference if you're new to trading, the difference between the quote currency and the base currency. These days, the yen is not really a safe haven because we've come out of this pandemic and roaring into a war with a problem, inflation, and that's been a real problem for the central banks. How they deal with inflation. And again, this is getting back to the sentiment, the feeling, how Jerome Powell and Andrew Bailey are feeling about their individual markets. And they were very in denial for months and months about the seriousness of inflation. Well, it turns out they were wrong, and the rest of the world was right. We were saying, hey, this is not transitory, as they were saying. I love how they make new words up. This is not temporary. This is going to be a serious thing. This is going to last until we sort out all of our planetary logistics problems, get COVID under control, and so forth. So they finally realized that, yes, the sentiment of the central bank governors a few months ago, or even a year ago, was actually wrong. They were wrong about inflation. And the reason I'm mentioning this was because every major economy had a problem with inflation, except for one, the Japanese. They had the other problem. They had deflation, and that's the last thing they wanted. It was actually, in their case, a worse problem. So there was suddenly a massive imbalance between the bond values, or the bond yields, I should say, between the United States and Japan, and the yen and the dollar, and there was a huge interest rate differential between the American economy and the Japanese economy. So suddenly the Japanese had a huge problem with deflation. The Japanese yen got very, very weak, and as I'm doing this webinar, it's actually still quite weak. So we have had a bit of a problem. So yen right now is no longer a safe haven currency. If you want an inside tip from me, or not inside, my gut feeling is that this is not going to last very long. So there could be some really good opportunities in going long on the yen, or in fact short on dollar yen. So again, keep an eye on the sentiment, keep an eye on, and that's what a lot of Valutrades traders are thinking the same way. If you look at these Valutrades trader sentiment, they're probably thinking the same thing. This can't last forever. Dollar yen on my chart is up to the ceiling. I'm going to go short. I can't say for sure that's the correct trade, but there's a lot of logic behind that reasoning. When the yen gets stronger and the dollar suddenly slows down its growth and its strength, then dollar yen is going to come down. So it's very important to keep an eye on the sentiment here. Okay, here we have right now, we have dollar yen, and you can see very, very simply that the green line is the highest one. that means that the non-commercial players on the consensus or the commitment of traders is high. What you need to look at this chart, and this is really, really important. This chart is different than the others. I'm going to explain to you in about a couple of seconds. Look at the very middle of the chart, and you can see something very, very important that we didn't see on the other COT charts, a crossover. So if you're using commitment of traders as an important tool, or even the Valutrades trader sentiment, you'll notice a big shift right in the middle of this chart. And this is where the big boys, the fund managers and the banks really, really pay attention. They may or may not pay attention to the fact that the non-commercial guys are all going short on dollar yen, or maybe they're going long on dollar yen. But boy, they wake up when there's a crossover. That is a very, very serious thing. So if you're going to use this, using the sentiment from Valutrades, using the sentiment on the commitment of traders, when you have a crossover from bullish to bearish or vice versa, that is a serious wake-up call. And you can see exactly what happened on the chart. If I look where my skinny black line is, where the crossover is, you can see what happened. The dollar yen took off, and a lot of funds clearly made a lot of money simply by paying attention, and they were in. So hopefully they'll sell off. They'll sell off their dollars. They'll buy their yens, and the whole thing will reverse. And that's when we need to pay attention to the and as I've been showing on our charts. Clearly, some Valutrades clients are really looking at dollar yen going back down. And it's, again, I'm not giving you trading advice. It's a logical thing to do because lately the dollar yen charts price action has been moving down. Obviously, we need to be paying attention to what the central bank in Japan is doing. We need to be paying attention to what the central bank in the U.S. Federal Reserve is doing. And of course, all our technical indicators. But this is a very, very good lesson in sentiment. Again, I'm going to repeat, sentiment changed from bearish to bullish, and price action took off to the upside. This is a good lesson. Okay, and we have another one. We have pound dollar, cable as we like to call it. And here we have Valutrades customers all going long on pound dollar, right, wrong, or indifferent. That's where they are. So I'm going to show you how that changed over the last week. And you can see as well that a lot of traders actually changed their position, or heaven forbid, they were stopped out and done. But you can see it going in the 77% area. Now it's down to 75% area. So you can see what's happened is that if you've been paying attention to pound dollar, pound has been actually falling for various reasons. And here again, we have another case where a currency pair is being driven by the American dollar, but it's also being driven by the pound. And the pound also, again, reacts to different things than, say, the yen or gold react to. I've noticed over the years that the pound will react more to instability in Parliament than almost any other currency. I've noticed in the United States, politics can waver between Democrats and Republicans, left and right. And yes, you'll have shifts in the strength of the U.S. dollar. Lately, we've had some interesting things going on in London, regarding COVID fines and Partygate and Beergate and all this other nonsense that gets in the way of government, and it has dramatically affected the pound. And hand on heart, I don't know of any other economy where the currency is affected so much by internal silliness in the government. It's not Boris Johnson's fault. These things just happened. Whether he and his cohorts had serious lacks of judgment. But you can see if you look at the chart and line it up with these so-called scandals and perhaps illegal events against the pandemic, contrary to the laws of the pandemic, the pound was affected. Right now, the pound is falling because of a lot of other things. There are problems with production. There are problems with energy supply. Inflation is running rampant in the UK. Andrew Bailey was very slow to raise interest rates. And his last statement, he came out, and again, this is getting back to the sentiment of one guy of the central bank of the Bank of England, Andrew Bailey. He raised the interest rates, which in theory should have increased the pound, the value of the pound, but his speech afterwards was very much doom and gloomy. So he was very honest And he said, we don't know how we're going to get out. This is not good. We're not in a good situation, without going into details. And the pound fell. So normally when interest rates go up, the pound or any currency will rise. But when the central bank governor comes on a few minutes later or half an hour later and says, hey, doom and gloom, that has more of a driving effect on the currency than the actual interest rate rise. And that's exactly what happened, is the pound is falling now based on the sentiment, the bearish sentiment of the central bank governor and his team. So this is where you really need, I'm going to be pounding this home to you, you really need to be aware of what the sentiment is on with the central bank governors and, of course, even the politicians. And again, the pound can very often react more violently than some other currencies like that. Okay, and here again we have the COT, the commitment of traders, and again, watch the green line, not the blue or the red line, so you can see what's happening right now. If you follow along, you see a few crosses, and these were very good opportunities for traders to take advantage. And right now, the consensus, the commitment of traders is actually very bearish. It's gone down quite a bit. So we'll keep an eye on that. And if you're like me, you're looking at support and resistance. There's a line of support at 1.2 pounds to the dollar. So when we come back, if price ever gets back down that low, we hope not, we'll take a look at the commitment of traders and see if there's a crossover there as well. So again, you're not only looking at the sentiment. The most important tool in your box is the horizontal line. I'm going to be talking about technical analysis now for a second. So when you see this line across this chart at 1.2 dollars to the pound, or maybe above at 1.45 dollars to the pound, these are important lines of support and resistance. In fact, you can see that the line at 1.35 was clearly very important resistance some months ago, or even a couple of years ago. So combine all these things together, support, resistance, trend line, sentiment, and you can put yourself together a very, very good trading plan, whether it's based on commitment of traders or the Valutrades trader sentiment. Okay, let's take a look at Aussie, but first let's have a quick sip of rooibos tea. No, this is not gin and tonic, it's actually rooibos tea. Right. Okay, the Australian dollar is another kettle of fish. The Australian dollar can be affected by other factors that may not affect other currencies. The Australian dollar, and let's quickly look through the progression of the Valutrades trader sentiment. Okay, we had, again, this is about 10 days ago. This was about 8 or 9 days ago. It went more long than short, came back a bit, but then suddenly there was a big old flip. And hopefully it was because they were watching my videos. I was saying go short on Aussie dollar. There were quite a few fundamental and technical indicators that said go short on Aussie dollar. If you go back to my videos on Market Blast, you'll see that, hey, I was right. How about that? And one of the things that drove Aussie dollar down was ironically the opposite. I talk about counter trend trading. The Australian government raised the interest, or the central bank, the Reserve Bank of Australia raised the interest rates. It drove price back up into a trend line, into a bearish trend. And within a couple of days, we took serious advantage of that and went short on Aussie dollar. So when you hear me talking about counter trend trades, that was it. So that was a technical trade based on a fundamental event. And again, sentiment comes into it because the downward trend was clearly quite bearish, and the market decided to continue with that. So why am I talking about the Australian dollar? The Australian dollar is one of the currencies we call a calm doll, basically a commodity dollar. And what are they? There's the Australian dollar, there's the New Zealand dollar, and there's the Canadian dollar. These currencies fluctuate dramatically based on commodities, whether it's, in the case of Australian dollar, it's gold, and oil, of course. The Canadian dollar is very, very dependent on the price of oil. The New Zealand dollar is dependent on much of the agricultural products and so forth. Dairy products is huge in New Zealand. One of the things you can trade on the New Zealand dollar is the dairy report. I'm not kidding. It may sound silly. I've actually made quite a bit of money over the years, waking up at 2 o'clock in the morning and trading the dairy report on the New Zealand dollar, and that's based on sentiment. And one of the nice things about the dairy report was that very often analysts got it wrong, which gave us a great opportunity when the real figures came out to either take a counter trend trade on Kiwi dollar. So again, that's based on bearish and bullish sentiment of the market. So again, the Australian dollar is driven by different things than say gold or the yen or the pound. And again, you need to think in pairs. It's also being driven by Aussie dollar. So you don't have to necessarily trade Aussie dollar. I will very often see something maybe on Aussie dollar, but end up trading Aussie yen. I'll do my strong week analysis. And if you catch the next webinar in 2 months' time, we're going to be talking about how to analyze a currency pair. So I'm going to be combining all these wonderful tools I keep talking about into how to analyze a currency pair. So I may see strong sentiment on, say, dollar yen, but I may end up trading pound yen for other reasons, maybe based on the fact that pound is weak and yen is strong, or vice versa. So if you do your strong week analysis, I mean, very often I've traded the non-farm payrolls and seen some really strong movements on a lot of currency pairs with obviously the quarter-based currency is the American dollar, but I've ended up trading gold because it made more sense technically to trade the rebound on gold than say pound yen. So we'll be looking at that in the next webinar on how to analyze a currency pair. So I will very often not necessarily trade one pair, but I'll be looking at all the different pairs based on one currency, whether it's the Canadian dollar or the Japanese yen. So we'll go through that in 2 months' time in our July webinar. So here we have a dramatic flip-flop on Valutrades trader sentiment. In fact, if you look at today's, it's actually gone back again. So, and these are updated once per day by the Valutrades team. So you can see which way everyone's going. And hopefully they got their short positions in, followed my videos and scored some pips on short Aussie dollar. Okay, and again, here we have the commitment of traders on the Australian Aussie dollar, so the Australian dollar versus the American dollar. And you can see by the green line, they've been short on Aussie dollar for quite some time now. And it's starting to come back. So again, keep an eye on this, because if it crosses over, this could be something quite important. And again, keep in mind that the Australian economy is very dependent on what's happening in China. Right now, China is having some serious trouble with production, COVID lockdowns, logistics problems, production problems. And that's going to affect Australia, because a lot of imports and exports from Australia to China and vice versa really affect the Australian economy. They very much depend on the Chinese economy for their exports. So when the Australian dollar gets weak, and you can see by this chart here, if you draw some, you don't even have to draw any trend line, you can see that it's been trending down since a year, basically March of 2021, if you look at this chart. And that is basically, I can put bread on butter saying that that's more to do with the Chinese economy than it is to do with the Australian economy. Okay, we looked at the disaggregated chart on gold, and it gave you some ideas on who's doing what. On currency pairs, it's a bit different. So the top chart is basically the same. So we want to pay attention to the green line, which are the non-commercial large speculators, which is money managers, funds, and so forth, and big family offices like the Shuros family and so forth. The bottom line is something different. The red line are intermediate dealers. The green line are asset managers. The blue line are leverage funds. And the orange line are non-reportables. Again, you may want to ignore all these guys and just stick with the green line. I feel that's the most important line you need to look at when you're looking at the commitment of traders. And again, I'm going to repeat, the commitment of traders on the Australian dollar has been bearish for some time. It's starting to creep back up. So you can see where it started to go bearish in June of last year, so we're almost a year away, and it's creeping back up into the bullish zone, but it is still bearish. And again, the sentiment is based on probably what's happening in China now more than anything than is happening in Australia. Okay, and here we have, this is what I was talking about. Right now, the Valutrades traders are in agreement. At least they were. I think this was yesterday, to be honest. This Valutrades client sentiment chart. So 72% of Valutrades client were short on the Aussie dollar, and 29% of Valutrades clients were long on the Aussie dollar. So that's a good sign. They got that right. Okay, right. There are lots of other sentiments available. So we talked about just basically following what the central bank governors talk about. We looked at Valutrades client sentiment. We looked at the commitment of traders, and again, you can just Google commitment of traders and find various charts. You'll find some people want to charge you lots of money for it, but if you dig deep, you can find them for free. And again, I'm going to repeat this over and over again. This is just one tool in your tool bag in your trading plan. Again, you can have multiple different things. When I open a trade, I want to know what's happening with fundamental events. I really want to take a look at the economic calendar. I listen to the central bank governors, and if I get a feel for which way a currency is going. In fact, you've seen my charts. If I go to look at a chart, very often I will show you a chart of American U.S. majors. I don't just look at dollar yen or euro dollar. I show all the American dollar pairs at the same time, and I may say, look, they're all going in one direction, or look, it's a bit mixed today. So that is important to understand before you open a trade. Before I even look at anything technical, I want to know my fundamentals. I want to know what's happening. Canadian retail sales is happening. I'll give you an example. I was actually scalping years ago, dollar CAD, and unbeknownst to me, the Baker Hughes rig count was coming out, and it was not on anybody's economic calendar. And I had 3 or 4 scalps in a row. I was very profitable, very, very happy with that. Suddenly, bang, the dollar CAD went in the wrong direction because I wasn't paying attention to the right calendar. So now when I trade Canadian dollar, I make sure I have an oil calendar available as well about OPEC, Baker Hughes rigs count, inventories, and so forth. So pay attention to your economic calendar. And again, with sentiment, pay attention to what the central bank governors are thinking. Even in the United States, the Reserve Bank, the Federal Reserve has different St. Louis president, New York president, Atlanta Fed. They all have different ideas. And you've heard about the dot plot. You can even pay attention to what those guys are thinking because they can actually drive the markets based on their sentiment. So you've got sentiment and fundamental analysis first, and I look at my technicals, support, resistance, chart patterns. If you follow my videos, you know I love chart patterns. Then I look at indicators. I could use Bollinger Bands or moving average crosses. Then I've got my oscillators, which you know I love. My favorite is the stochastic oscillator. And then I can even look at candlestick patterns. I want all those in a row before I make any decision. That's not to say I have to have all 6, 7, 8 things ticked, all the boxes ticked before I open a trade. But what I don't do is just go willy-nilly based on one trade. Okay, and this is what I want to talk about right now. You can get sentiment from people like Bloomberg. I mean, I'm fortunate I have Bloomberg on all day long, at least all morning long, because I'm in the business and I enjoy listening to them, and some of the banter is quite good. But they will do interviews with hedge funds, and they will simply ask, and a good interviewer with Bloomberg will ask a hedge fund, what are your clients asking for? What are you long on? What are you short on? What currencies are you trading? And they will come out and tell you, oh, we're long on tech, we're short on hotels, we're long on euro dollar. We don't like pound right now. They will go over and over all these things, and these are good. This is good information, but you need to be careful about these because I have seen people just make willy-nilly trades based on something they heard on Bloomberg. And there are 2 things to keep in mind with sentiment based on these interviews. One is, and the most important thing is, somebody may say, oh yeah, we're long on euro dollar. They probably won't tell you how long they've been long on euro dollar. If they've been long on euro dollar for a year, that's different than being long on euro dollar from last week. And if you don't know, you could be jumping into some trouble because they may be long on euro dollar and then next week they sell it, and you don't see it coming. And that happens to a lot of beginning traders. They follow the wrong advice, or they think they have advice and they go wrong on it. And the other thing as well, you may find that Bloomberg will interview several different hedge funds in the same day, and they will have completely different opinions. They will say, hey, we're long on the pound. No, we're short on the pound. No, we're avoiding it. So you need to be careful with these things. So that's also a form of sentiment that you can use. Bloomberg used to do a thing where they would interview a hedge fund and have a chart going on beside it to see how the interview was driving the price of that stock. I think they've stopped doing that now because it was probably against every rule in the book with the new regulations. But you can follow those things, and it doesn't have to be. I know a lot of students I have they love following Yahoo Finance or even Google Finance. There's a lot out there, and FX Street and so forth. I contribute to FX Street once a week. Maybe you may have seen my forecasts on there. In fact, they sell our forecasts on all these different currency pairs to different brokers, right, wrong, or indifferent. Let you in on a trick that, not a trick, but inside. We're asked to do our forecasts on Friday afternoon, and to be honest, Friday afternoon is probably the worst time to do your forecasts because you're roaring into the weekend. The markets are getting ready to close. I'm going to show you in our next video, our next webinar, how to do a strong week analysis. And probably the best time to do a strong week analysis is on a Tuesday morning. So that's something else to keep in mind. Okay, I hope that's been valuable. I hope it's not been too confusing. So again, you can see on these all these guys looking at their laptop and the bubbles of Valutrades trader sentiment bobbing along beside them, using this as a tool. It's an important tool. Trader sentiment, commitment of traders, all the different fundamental analysis, the bearish and bullish sentiment of Andrew Bailey and Jerome Powell and so forth. So if you have any questions, just pop on to the Valutrades customer support. They can either get back to me or they can answer the question directly. Hope you recall exactly where to find. You just go on the website. You can find the Valutrades trader sentiment. And good luck trading and have some fun. And stay part of the 40% that make money trading with Valutrades, because you're all stars. Thanks a lot, and we'll see you soon.